Silver just shocked the market again, prices dropping fast, investors confused, and headlines screaming volatility. But here's the real question nobody is answering clearly. Is this the beginning of a crash? Or the biggest opportunity smart money has been waiting for? Because while most retail investors are panicking right now, something very different is happening behind the scenes. Institutional players aren't running away. They're watching closely and in some cases quietly stepping in. To understand what's really going on, you need to zoom out for a second. Not long ago, silver was one of the hottest assets in the entire market. After a massive rally through 2025, prices surged more than 100%, even touching extremely high levels compared to previous years. That kind of move doesn't happen randomly. It was driven by a combination of inflation fears, strong industrial demand, and a global shift toward hard assets. But markets don't move in straight lines. After such a powerful rally, a correction was almost inevitable, and that's exactly what we're seeing now. Silver has pulled back sharply from its recent highs, entering a phase of intense volatility where prices swing aggressively in both directions. At first glance, it looks scary. Red candles, sudden drops, uncertainty everywhere. But volatility doesn't always mean weakness. Sometimes it's a transition phase. Right now, several powerful forces are pulling silver in opposite directions. On one side, you have pressure coming from the U.S. economy. Interest rates are still relatively high, and the Federal Reserve has not rushed into cutting them. That matters a lot because silver, unlike bonds or savings accounts, doesn't generate yield. When interest rates stay high, investors often move money into assets that give returns, putting pressure on metals like silver. At the same time, the US dollar has shown periods of strength, and a strong dollar usually pushes silver prices lower because it makes commodities more expensive for global buyers. Then there's inflation. It's still a major concern. Rising oil prices are adding fuel to inflation fears, and that creates uncertainty across all financial markets. Normally, precious metals benefit from inflation, but when inflation also keeps interest rates high, the effect becomes complicated, and that's exactly why silver feels so unpredictable right now. Add to that geopolitical tensions around the world. Conflicts and global uncertainty usually drive safe haven demand. But in today's environment, the reaction has been mixed. Investors aren't rushing into silver the way they traditionally would. Why? Because they're waiting. Waiting for clarity. Waiting for signals from central banks. Waiting to see which direction the global economy is really heading. And during this waiting period, markets become volatile. Now here's where it gets interesting. While prices are falling in the short term, long-term fundamentals for silver haven't disappeared. In fact, they're still very strong. Silver is no longer just a precious metal. It's an industrial powerhouse. It plays a critical role in solar panels, electric vehicles, and advanced electronics. As the world pushes toward clean energy and technological expansion, demand for silver continues to grow. This isn't speculation, it's structural demand. And that creates a very important dynamic. Short-term traders react to news, interest rates, and price movements. But long-term investors focus on demand, supply, and future trends. And right now, those long-term trends are still pointing upward. But here's the psychological battle happening in the market. When prices drop quickly, retail investors often panic. They see losses, they fear a bigger crash, and they exit positions. This creates more selling pressure, pushing prices even lower. Meanwhile, experienced investors understand that volatility often creates opportunity. They don't chase prices when everything is going up. They wait for dips, corrections, and fear-driven selling. This phase, the one we're in right now, is often called an accumulation phase. It doesn't look exciting. It doesn't make headlines. But historically, it's where smart money builds positions before the next major move. Now let's talk about key price levels, because this is where the technical side meets psychology. There are certain zones in the market that act like battlegrounds between buyers and sellers. Right now, the area around $60 to $65 has been acting as a strong support zone. This is where buyers have shown interest, stepping in to prevent deeper declines. Above that, the 70 level has become critical. When prices drop below it, sentiment turns bearish. When prices move above it, confidence slowly starts to return. On the upside, the 80 to 90 range is the real test. That's where previous highs created resistance. If silver manages to break and hold above that zone, it could trigger a powerful bullish move. But if it keeps failing there, the market may remain stuck in this volatile range for a while. So where does this leave us? To answer that, you have to think in scenarios, not certainties. Let's start with the bullish case. If the Federal Reserve begins cutting interest rates, even slowly, it could change everything. Lower rates reduce the opportunity cost of holding silver, making it more attractive to investors. At the same time, if the US dollar weakens, that would provide additional support. A weaker dollar typically boosts commodity prices, including silver. Combine that with strong industrial demand from solar energy and electric vehicles, and you have a powerful setup. In that scenario, silver could not only recover, it could push toward new highs, potentially moving back into the 90 to 100 range and beyond. Now consider the bearish scenario. If inflation remains stubbornly high, central banks may keep interest rates elevated for longer than expected. That would continue to pressure silver. If the dollar strengthens further, it adds another layer of downside pressure. And if global economic growth slows, industrial demand could weaken slightly, removing one of silver's key supports. In that case, silver could drift lower, possibly testing the 50 to 60 range before finding stronger support. So the market is standing at a crossroads, and this is where the biggest opportunities are usually created, because uncertainty creates volatility, and volatility creates mispricing. Some investors will see risk and stay away. Others will see opportunity and prepare for the next move. The key is understanding that silver is not just reacting to one factor. It's being influenced by a complex mix of monetary policy, global economics, industrial demand, and investor psychology. That's why simple answers don't work here. But if you step back and look at the bigger picture, a pattern starts to emerge. Short-term weakness, long-term strength, fear in the present, potential in the future. And that brings us back to the most important question. Is this dip something to fear or something to watch closely? Because history has shown that some of the biggest moves in silver happen right after periods like this. Periods where the market feels uncertain, unstable, and directionless. Moments when most people are unsure, but a few are paying very close attention. So the next time you see silver prices drop, don't just ask why it's falling. Ask what might happen next. Because in markets like this, the biggest story isn't the drop itself, it's what comes after.